if you're considering used versus new, used cars, buying a used car nowadays is a lot safer purchase than it used to be, and a lot of times makes more financial sense for someone. You can a lot of times move up in a model, a nicer model than you originally were looking for. But if you buy a used car, you are missing out on some of the things that are advantages of buying a new car. A lot of times a new car will come with a little better financing, and also you might miss out on those new bells and whistles that a new car may have, the new GPS systems, and the big thing is you're going to miss out on that new car smell.
When it comes to financing, typically when you purchase a car, one of the last things that you wrap up, whether you do that at the dealership or here through Forum, is going to be your financing, but it should actually be one of the first things that you consider before you even start shopping. The reason I say that is because you need to have a good understanding of what kind of monthly payments you're comfortable with, not only your finance payments, but your maintenance items and automobile insurance and things like that that are going to be on top of your actual financing payment. Now, going into your amount financed will obviously be the purchase price of the car, your sales tax, and then your down payment will factor into the amount that you actually finance. So if you're looking for a $200 a month payment, you really, unless you have a large down payment, you really shouldn't be looking at a $20,000 or $30,000 car. That's not realistic. And that's really one thing that you need to set up before you even start shopping for vehicles, is what your comfort level is as far as payment. When it comes to your actual monthly payments, there's a couple different ways you can go. You can go a traditional auto finance, typically terms between 36 and 72 months, or you can lease. Basically, the idea behind leasing is that if you don't drive a lot of miles per year, it can be a good option because leasing basically allows you, your monthly payments are loosely based on the difference between the purchase price of the car and an anticipated future value of the car, which they call a residual value. So for example, if the car you're purchasing is $20,000 and after 3 years we anticipate that car will be worth $10,000, then your payments will roughly be based on that difference plus some finance charges and things like that.
There's 3 or 4 websites that I like to use when I go look for a car. The first one would be nada.com, which is a good website to determine what the value of a used car might be. There's also, if you're looking for a used car, cars.com and AutoTrader and Edmunds.com. That's a good all-around website that gives you general information about everything that you want to know about a car buying or a car. The biggest mistake is to someone that's buying their car is not to do their homework and decide on what model they want to buy before they go into a dealership, and also not test driving a vehicle. Definitely test drive the vehicle. Don't take anybody's word for how it rides or how it drives. Make sure you want that car before you start negotiating price.